Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. And today we've got a juicy one from Reeds Incorporated that's got a bit of everything. Before we dive in, if you enjoy unraveling these financial mysteries, hit that subscribe button. And for more real-time insights and to join our community of financial sleuths, check out the Discord link in the description below. So Reeds Incorporated, a company you might know for its beverages, has just filed an 8K form. This isn't your typical quarterly report, but rather an 8 current report, which means they're announcing some pretty significant stuff that doesn't make it into their regular filings. Think of it as the breaking news section for corporate disclosures. The earliest event they're reporting on happened on the 4th of December 2025. This filing is all about Reeds Incorporated. They're incorporated in Delaware, and their stock trades under ticker symbol REED on the NYSE American. One of the big moves Reeds has made is updating their bylaws. These are basically the internal rulebook for how the company is run, effective the 5th of December 2025. Coinciding with their common stock listing on the NYSE American, they've put in place new second amended and restated bylaws. What does this mean for you and me as investors or observers? Well, these changes are aimed at making things clearer and more structured when shareholders want to nominate directors or propose new business at meetings. They're really tightening up the rules around how shareholders can put forth their ideas, especially when it involves proxy solicitations. It's about making sure everyone's on the same page and following the proper procedures under SES rules, like Rule 14 and Negative 19. Another key update here is that they are now explicitly allowing shareholders and those holding proxy votes to participate in meetings remotely using technology. This is a big deal in today's world, making it easier for more people to be involved without having to be there in person. They've also removed an older requirement before. They had to make the list of eligible voters available during the meeting itself. That is no longer the case, simplifying things logistically. They've also put in place procedures for what happens if a meeting has to be postponed or adjourned because of technical problems with remote communication. It's good to see they're thinking ahead about these potential hiccups, and importantly, they've strengthened the provisions regarding indemnification for their directors and officers. This is about protecting the company's leaders from potential liabilities that might arise in the course of their duties. It is a common practice, and strengthening it can sometimes attract better talent by offering more security. Now, we get to one of the most exciting parts, other events. This section often holds the most impactful news, and for Reeds, it's about a significant stock offering. On the 4th of December 2025, Reeds entered into an underwriting agreement for a public offering. This means they agreed to sell shares of their common stock and warrants to investors. They offered a total of 2,500,000 shares of their common stock, and alongside that they offered warrants to buy up to another 25,000,000 shares. Warrants are like options, giving the holder the right, but not the obligation, to buy stock at a certain price later on. Each share of common stock came bundled with a warrant. The combined price for this package was $4, before accounting for fees and commissions paid to the underwriters, who are the investment banks helping to sell the shares. They also gave the underwriters an over-allotment option, often called a green shoe option. This allows the underwriters to buy up to an extra 375,000 shares or warrants if there is a lot of demand. It is a way to help stabilize the stock price after it starts trading, and it looks like there was strong demand because on the 5th of December, the underwriters did indeed exercise this option, but only for warrants to purchase 375,000 shares. So they raised a good chunk of money from this offering. After all the deductions, Reeds brought in about $9 million from this offering. So what's this money for? They plan to use it for growth initiatives, working capital which is essential for day-to-day operations and other general corporate needs. They also mentioned it could include repaying debt. This is pretty standard for companies raising capital. Now let's talk about those warrants. They each come with an exercise price of $4.5. This means that if the stock price goes above $4.5, a warrant holder can buy a share for $4.5, pocketing the difference. To raise an interesting clause here about ownership limits. Holders can't exercise their warrants if doing so would make them own more than, say, almost 5% or almost 10% of the company's stock. This is often done to prevent a single investor from gaining too much control too quickly through warrant exercises, especially in smaller companies. It's a way to keep the ownership more dispersed. This next piece is quite telling. D&D Source of Life Holding Limited, which is already the controlling shareholder, bought about $5 million worth of the securities in this offering. This shows significant confidence from the company's biggest stakeholder, which is generally a good sign. They're putting their money where their mouth is. This whole offering was done under a registration statement on Form S-1, which is a standard filing for companies going public or conducting major stock offerings. It was declared effective by the SEC on the 4th of December. And here is another key event in connection with this offering. Reed's common stock was approved for listing and began trading on the NYSE American on the 5th of December 2025. This is a significant step up from trading on the OTC market's OTCQX best market. Listing on a major exchange like the NYSE American usually brings more visibility, liquidity, and prestige to a company. Finally, they list out all the official documents that back up this report. We have the underwriting agreement, which details all the terms of how the shares were sold by the underwriters. And as we mentioned, the new updated bylaws are included. We also see the actual form of the warrant agreement, outlining precisely how those warrants work. And at the very end, we have the signatures. Douglas W. McCurdy, the Chief Financial Officer, signed off on this report on the 8th of December 2025, confirming its accuracy. Alright, let's break down what this all means for Reed's Incorporated on the whole. This filing paints a picture of a company actively working to strengthen its position. The updated bylaws suggest a commitment to good governance and clearer processes for shareholder engagement, which is always a positive. The big story here is the public offering and the subsequent uplisting to the NYSE American. Raising $9 million is a substantial amount for a company of this size, and it provides them with the fuel they need for growth initiatives. The fact that insiders, including the controlling shareholder, bought a significant portion of the offering $5 million worth is a huge vote of confidence. It tells you that the people running the company believe in its future prospects. The move to the NYSE American is also a significant achievement. It usually means the company has met stricter listing requirements, which can attract institutional investors and improve the stock's trading liquidity. For investors, this means potentially easier buying and selling of shares and increased exposure. However, we should always look closely at the terms. The warrants with the $4.5 exercise price and the ownership limitation clauses are important to watch. They are designed to manage dilution and control, but they also introduce complexity. As the stock price moves, how these warrants are exercised and what impact they have on the share count will be crucial. Also, while the company stated they will use the funds for growth, working capital, and possibly debt repayment, the actual allocation of these funds will determine the long-term success of this capital raise. We'll be looking for future reports to see how effectively they deploy this capital to drive that growth. Overall, Reed's Incorporated appears to be in a more robust position after this filing. They've secured capital, improved their governance structure, and gained significant market visibility through the NYSE American listing. The key now is execution, turning that capital into tangible growth and profitability. What's your take on Reed's latest moves? Do you see this as a turning point for the company? Let me know your thoughts in the comments below if you found this deep dive helpful. Please give this video a thumbs up and don't forget to subscribe for more fearless corporate decoding. And remember, our Discord community is always buzzing with great discussions, so join us there too. Thanks for watching and I'll see you in the next one.